Welcome to Raising the Curve, a podcast designed to teach you everything that you need to know to be better with your money. Come and learn alongside me, Sophie Hallwright, a total beginner, from the finance expert, Victoria Harris.
So I've asked all of the questions you wish you could so that finance, investing and growing your wealth actually makes sense.
Yes, it's expert education, but that we promise will not be boring.
And in the wise words of Cher,
my mom said to me, you know, sweetheart, one day you should settle down and marry a rich man. And I said, Mom, I am a rich man.
Come and talk and learn and laugh with us, because together we really can raise the curve.
we're taking a bit of a trip down memory lane, a big trip down way back down the lane.
Years and years ago. It's hard to even remember this part of our life, to be honest. I saw images of us in the first studio we ever rented, and we look so different.
So different, so young.
So young.
I was actually just looking at some videos before of me talking to camera. And I was
no.
smile, Vic, smile. It's like,
It's amazing how much we have talked.
it's just also like, thank you for everyone for having the patience for when we were starting out, because it's like.
See, interestingly, I was thinking that for ages, and then after listening to this episode and thinking, gosh, we really should re-release this, I was actually thinking we sound quite good, considering this was in our first 50 episodes.
Born to podcast.
Well, no, but obviously we were just editing the shit out of ourselves at that point because we couldn't string a sentence together without stumbling.
I remember Sophie's stomach rumbled in one of the earlier episodes.
That one should make a comeback. I think that was a
and I
funny
was
episode.
like, absolutely not. So unprofessional. Now we swear and we
But this episode is all about why it's so important to not keep your money in the bank. For generations, we have been taught to scrounge our money together, save for a rainy day. The word saving, we use so much. The words investing are not really a part of our vocab, particularly as women. I know that's probably not necessarily a gendered thing, but this episode for me was such a penny drop moment of get your money out of the bloody bank, Sophie. I had my whole life savings, any money really to my name, in a bank account at this point when we recorded this episode. And I think the explanation of how inflation and what goes on in the environment around and how you think it's so safe there, it's really a not particularly clever way to have your money just sitting, essentially just like being eaten away at by things like inflation.
It's safe, yeah, but it's not growing. And because we're taught, even as early as I can remember, when you're doing chores, it's like you make money and you either spend it or you save it. There's no invest it. You know, like you're not taught those concepts. So fair enough that we only ever think there's two options, save or spend. But there's a big, big third option. But yes, keeping money in the bank, particularly when inflation is high, is honestly the worst thing. You are literally losing money day after day after day if you're not investing it.
It's quite interesting because I remember once, like, I can't even remember what the context was, but you went into your banking app in front of me and I remember seeing how little was in there. And for a moment I felt
like, she's poor.
Yeah. Honestly, for a moment I felt quite proud. I was like, I've got more money than Victoria. And then I realised that is the best thing to do is to have only really what you need in those everyday accounts. I had everything in that account. It blows my mind. And it seems so obvious now.
Yeah.
It seems so obvious now, but it's not obvious for a lot of people. And so we wanted to bring this episode back. It's an archive episode. It's all about why you should not be keeping your money in the bank. And even if you've listened to this before, given what's happening at the moment economically, it's a really good reminder how much you need to be critically thinking about where you're leaving your money.
You should be thinking, what is the littlest amount that I need to have in the bank? And what can I invest in terms of the rest?
Yeah. So you don't really need to listen to the episode.
That is the punchline.
It's really the punchline. But if you need a bit more convincing, here is one of our episodes from honestly 3 years ago.
So today we are going to learn about why we always say invest for the long term.
Do you know what's funny is that Vic is constantly saying this to me, and I reckon for about a year I've had invest for the long term, so I've invested, and I've just been like, God, come up with some new material, Vic.
That annoying friend.
But now I get it. It's really starting to actually sink in.
And we actually had an event the other night, and one of the questions was like, but what is long term? And so I think it's a really good starting point is to actually define what do we mean by long term and what do we mean by short term?
Because I would have thought short term's like 2-3 months. I mean, long term's like a year and a half, but it's totally not, is it?
It's like a long-term relationship. It's like a couple of years. Short term's a couple of months. In investing, completely different.
Right. So what would you say is like proper long term?
So proper long-term, like what's defined by the industry is anything over 5 years. But for me, I reckon 30 years is long-term.
30 years.
I think retirement time frame is long-term.
How do you live in the moment when you're thinking about 30 years away?
Every time I buy a coffee, no, I
Honestly,
need to invest in long-term.
30 years. I mean, wow. Okay.
Well, in 30 years'
I'm
time.
going to be 60.
Yeah, roughly. Yeah, we'll be near retirement or at retirement. And so for me, that is long-term. Short-term is anything before 10 years, I reckon. But in the industry, short-term's anything before 5 years.
Okay.
But I guess it's not defining short and long-term. It should be rephrased to invest for as long as you can, if that makes sense. The longer, the better. No matter what age you are. Because if you're 60, your long-term isn't 30 years because you're, sorry to say it.
I mean, they might live to 90.
They might,
know.
yes. Especially
My
this day and
granddad was
age.
104 nearly.
I know, that's crazy. That's crazy. But it just means that your long-term is probably going to be different to your parents' long-term, for example.
So long term for my mum might be 7-8 years.
Yes.
For me, it's 30.
Yes. So it's like the longer, the better.
So we should really be investing from day dot.
Exactly. That's why we say start yesterday.
It kind of makes sense why you own a house in Grey Lynn and I am still wondering if I can buy Uber Eats. No, but I think that's it, isn't it? It's like even 5 years makes such a massive difference in the long term.
Exactly.
You've been investing now, what, for like properly investing?
Properly investing probably for, I want to say like 10 years.
It's amazing.
Yeah. I mean, I didn't have a lot of money at uni because I was spending it on other
What
things.
were you spending on, Victoria?
Your typical student expenses.
Some KGBs, vodka cruises.
Exactly.
Snob lipstick. Remember that horrible MAC lipstick that we used to wear? And it was like bright pink.
Oh, yeah.
Horrible.
Yes.
And that was
Oh,
expensive. It was like
yeah.
$40.
Like pastel lipstick.
Like nobody looked good with that colour shade lipstick.
Yeah. And like goons.
Oh my God,
Those,
goons.
yeah. Is that what they're called?
I remember I drank a goon once and I ran into a glass wall. Like I'd probably had like a half of a goon. I just remember being so excited and I ran towards some friends and just fully like it was so
I
bad.
feel like that's something you would do sober as well.
Yeah,
Just
true. I had a migraine for like a week and a half. It was so painful.
Jeez.
So anyway,
we got a bit
digress.
sidetracked. Yes. So yeah, I've probably been investing for about 10 years. You know, as soon as I started actually having a full-time job and I was actually putting some money away for KiwiSaver and for like dipping my toe into certain stocks that I was interested in. So yeah, I've probably been investing for about 10 years.
it's amazing. And you were learning, because you would have been learning about investing at uni, so what, that would have been even before then. So by the time you started investing, you had a pretty solid base as to what you were
Of knowledge.
doing.
Yes. Yeah. But gosh, definitely made some mistakes, that's for sure.
Have you actually? Because
Yeah.
I feel like you say that and I don't believe you.
Well, you don't really go around being like, I lost money in this, and I lost money in that. Nobody does. No, everyone only ever tells their good stories. It's like, I invested in Bitcoin and it's gone up 100%.
Can you tell me one bad investment you made and you actually lost money on it?
Yes.
More than $1,000, like actually lost money.
Yes. So this was probably in my previous role. I feel bad naming the company because it was such a good company. But
Don't hire Vic. She sucks at her job.
No, it's more like I just don't want to name the company.
Does it matter though? Because it was.
No, it's
So you're working as a fund manager.
yes, yeah. And I invested in a company and it was like it was kind of like a tank, I guess.
Yum.
Like a tank juice bar, but it was more like healthy food. And I was like, oh, this is in a like health and wellness trend, that this is in a structural
growth. Oh.
Exactly. And then it was like the founder was there and like he was driving the growth. They were rolling out all these stores. And I think that the stock just got ahead of itself and they had unrealistic targets of what they could achieve. And in hindsight, which is great, the targets that they were trying to achieve in terms of the stores they were rolling out was just, they were opening like it's one store a week kind of thing, which was
Whoa.
just kind
Unrealistic.
of unrealistic. But I just
Jumped on the bandwagon.
had rose tinted glasses and just took what they said as gospel, and it was a huge learning curve.
Did you invest quite a lot in it?
Excuse the pun.
Did you invest a lot?
Yes.
Like how much?
It was part of a fund.
It's like 50 grand or more. Wow. So what happens in a staff meeting when you've lost, say, like hundreds of thousands of dollars? You're like,
look,
oopsies.
it's part and parcel of the day job. You get them wrong. But now I've learnt, don't take what management say as gospel. You know, you have to do your own research and think logically, can they open that many stores? My boss didn't care. Well, he did. But it was more sit me down and say, what have you learned? And, you know, we do say you learn the most from your mistakes, and you definitely do when there's money behind it. 100%.
Do you feel one of those, like, did you feel that loss even though it wasn't your own personal money?
I think it's more intense because it's not your money.
So
You have to answer to clients that you've lost money. But also that's why we run a fund. You've got 40, 50 companies in there. So yes, one blows up, but as long as the other 49 or 39 do well, then smooth sailing.
Yeah, okay. Diversify, etc.,
yes.
etc.
I think we just diversified off track a bit.
Yes, we really did. So investing for the long term. So
Yes.
it's anything really plus like 10, 20, 30 years ideally.
Yes, the longer the better. And this all comes down to risk. Your favourite word, risk.
I think I'm a bit of a baby when it comes to risk, to be honest. Like if everyone was like, let's jump off this cliff, I'd be like, is everyone else coming?
I'll only do it if everyone else does.
Yeah.
Yeah, well, we always say investing involves risk, and it does. And then risk is just the volatility of the asset. So the volatility of the shares or of the share price.
I find that word a bit confusing. Volatility means what?
The movement up and down. So cash, for example, very low risk because
And it's
you
not
don't
volatile.
you don't look in your bank account and go, oh gosh, it's up. Oh gosh, it's down. Oh, you log in and you've got $100 in there. Tomorrow you're going to log in, there's going to be $100 in there. So, you know, it's kind of...
So that's not volatile.
There's pretty much no movement in cash in the bank. So therefore, there's no risk. Well, very low risk. Whereas shares, you look at them, they go up, they go down, they go up, they go down, they go up, they go down. So there's a lot of volatility, which means there's a lot of risk. Does that kind of...
Yeah, no, it does. And then I guess you look at something like cryptocurrency
Oh,
and it's like up 25%, down 25%. My flatmate actually opened his like crypto wallet on his phone the other day. I'd never seen one before. And I was like, oh my goodness. Honestly, it felt like I was peeping into another world. I was just like, this is wild. It's fascinating though, and that is real volatile, right? Because he was saying that every day he goes in and the little red number at the bottom could be up 60% or down 60%. Like it's not consistent by any means.
No, and that's why we say invest for the long term, because so the advantage of long-term investing is that the relationship between the risk or the volatility and time means that over time that risk is lowered, that volatility is lowered. So
It's spread out.
It's spread out. So if you looked at a long-term chart of like Australian market, the US market, the New Zealand market, they all go up and to the right. The more you zoom out, so say you went 5 years, 10 years, 20 years, 30 years,
It's an uphill climb.
it's all uphill to the right. So that's why we say invest for the long term, so that you have the best chance of getting that uphill to the right in your investment.
Sorry, was I going to add something there?
No, sorry. I was just thinking. I was like, does that make sense?
It does make sense.
Yeah.
No, it does, because I guess, I mean, if you're thinking in terms of an uphill steady climb, like maybe if you're looking short term, you see the volatility, but
Yes.
what you're saying is over a long period of time, it's almost stretched out, and as an overarching trend in every stock market, long-term view, it's an uphill.
Yes.
trajectory.
And yes, there's little blips, but because you've zoomed out so much, they're little blips. Whereas if you zoomed in, that could be down, it could be flat with a big correction in the middle. You know, there's a lot more volatility or movement up and down when you zoom in.
Is the reason that every stock market is going up in terms of a long-term view, is that because the companies that are listed are generally more than not successful, and therefore the money that people are investing is growing these companies and therefore growing the value of the stocks and therefore returning to their...
Yes, exactly. So all the marketers. So when we talk about the US market, or the Aussie market. We're talking about the main index there. So the S&P 500 in the US, the ASX 200 in Aussie, and then in New Zealand it's the NZX 50. So that is just a bunch of a whole lot of companies. So yes, you're right. It's all those companies that are growing their earnings. It's also the underlying economy. So we all know that we're not in recession at the moment, or we're not in a period of a really long recession. There is economic growth, or what we call GDP, which is gross domestic product, which is just the measurement, and that's growing, sometimes around 2 to 3% each year. So you've got that underlying growth. You've got company growth on top of that. So over the long term, economies are growing in general. If they're all going backwards, gosh, we'll be in a dire situation. So it all comes down to more people on the planet, producing more goods. It's just more activity, more growth. And yes, that fuels that, as well as inflation. So when prices are steadily rising, then companies are generating revenue, they're generating profit, and that is reflected in their stock price. It's a part and parcel of the world growing, really. Mm-hmm. That's why we say nobody knows what's going to happen in the short term, because there's so many drivers in the market. Like you just said, company earnings, which is what we call the micro side of the market. And then there's macro side of the market, which is more of the economy, interest rates, inflation, all that stuff going on. But if you zoom out, take a long-term view, markets will go up. So that's why we say invest for the long term.
So really it's a no-brainer investing in stocks, because, I mean, yes, of course, there might be a few bad ones along the way, but overall it's increasing in value. So yes, as much as we're all sitting here like newbies like me being like, oh my God, this is so scary, actually the trend in general is a really positive one. Weren't you saying something like the stock market has gone up even more than the property market has in New Zealand?
Yes.
In terms of the yearly returns?
Yeah, so the NZX 50 has gone up about over 10% per year over the last nearly 20 years.
And what's the property market
And the
doing?
property market's like 8% in Auckland. That's just Auckland. But that's because you're taking on a bit more risk. There's less risk investing in the property market because there's less volatility, and New Zealand's got a property market of its own. But here is a stat for you.
Oh, I love a good stat.
So the NZX, so the New Zealand stock market, over the last 20 years, there's only been 5 years where the market ended down.
What?
So 15 out of 20 years, of the last 20 years, the New Zealand market has finished up. And up can be like 20%, 30%, it could be 2%. So all those people out there that are like, oh, but I'm going to wait for a market pullback, or I'm going to wait for a correction before I invest my money. You could be waiting 5 years, even longer. And
you're missing out on all
and
those returns.
You're missing out on all those gains while you're waiting for what might not actually happen. It's like you say, it's a no-brainer. I'd rather invest now, get those gains for 5 years. Yes, maybe lose a little bit if there is a correction, and then continue on those gains. Yeah, that's why. And the same in Aussie. So in Australia, same period of the last 20 years, there's only been 4 years where it's ended negative.
That's incredible.
Yeah. So this is why we say invest for the long term. If you'd put your money in for the 20 years, you would have had 4 corrections, but it's meaningless in the scheme of things, really.
Yeah. It's like if you look at, the boyfriends you've had across your life, you've probably had a few plonkers in there. But it doesn't matter because there's a few goodies. But that's the thing. It's like you've got to kiss a few frogs to get it, like
you've got to take the good and the bad.
Yeah. That's exactly what I was going for. I was struggling to find my analogy. Do you know what's bad as well is that I've actually still got money in Australia, and I have been thinking I'm actually not going to bring that over through TransferWise because, when I first moved over to Australia, the dollar was so much stronger, and I've been that classic. It's been years. I remember saying to you, honestly, probably 4 years ago, I've got my money over here, and I don't know if I should. I'm just so annoyed at myself. Well, I mean, there's only 10 grand, but for me, that's a lot.
Yeah, and it's just in the bank.
Yep.
So it's probably earning maybe 1%. Plus, you probably got bank fees.
Awesome. No, I do. I get heaps of bank fees.
Okay, so you're probably...
I keep saying like minus $13 bank stuff. I'm like, oh, damn it.
Cool. So you're probably getting nothing.
I'm probably...
Or you're probably getting that -3%.
Or maybe I'm honestly going backwards because there are some weird deductions that I can see. It's like...
So...
I know.
So, okay, let's work backwards. If I was to ask you how much money... do do you want at retirement?
I mean, I don't know.
Like a couple of hundred grand?
Or is that not enough?
Let's do maybe
300?
Yeah, okay, 3. So
I want to be able to buy some pastries and some yum treats.
So 300 grand, and you've got 10,000 in your bank in Aussie at the moment.
Are you laughing at my 10 grand? It
No,
you sound
I'm
like
doing
you
my
think this is funny.
I'm doing my maths. So you need to be getting about 10% per year for the next 30 years. And you're getting probably -2.
So I need to up myself by 13%.
But how amazing that you could if you just sat down for half an hour and actually put some time in and changed it and put it into a fund. I mean, I'm ignoring currency and all that. Say you put it into a fund manager that's generating 10%. You could literally sit back and relax and know that you've got...
Can buy my pastries when I'm 80.
You'll be able to buy pastries. It seems like a no-brainer.
Yes, okay, Vic, but I'm working very hard on the curve stuff, okay?
But
I have no spare time.
But honestly, the number of people in your situation that go, oh my gosh, that's amazing. And they genuinely want to do it. And then they leave our event, or they stop listening to the podcast, and then they forget about it, and then it's months' time and they still haven't done it.
I'm literally hurt. Yeah. This is exactly. You're talking to the audience.
I want to rephrase that though. If I was to say to you, Soph, I'll give you $300,000 for an hour's work. Oh my God. Would you take it?
Well, yes, I would make some time in my very busy schedule.
I think I would say yes. Gosh. Oh, and that's kind of, I guess, the mentality of how.
That's a great way to reframe it.
Yeah, and I think that's what everyone should think.
Or just spending money on looking after your finances, whether it be your tax return and you're going to get some tax back, and you're like, oh God, I'm going to put that on because it's bloody boring. But actually, it's so worth your time.
Yes, definitely.
Do you know, recently I've had this huge urge. I don't know how it's taking me so long, but within the last probably week and a half, I've all of a sudden felt this real will to want to start investing properly.
Yay!
I don't know why it's taking me so long, but I've just got to a point recently where I'm like, oh no, I've got this. You know, if I actually put some time and effort and energy in, I can totally make this happen for myself. I just actually have to do that. I think I've been sort of sitting back and feeling a bit still overwhelmed, still scared, still just like not ready.
Well, you're learning, and I think maybe you've probably got to a level now where
I have some kind of understanding where I'm like, oh, okay.
Which is great.
Yeah. I don't know, maybe it's just the idea that there is going to be ups and downs and it's not going to be perfect sailing, but that overall, even just hearing what you were saying about the markets generally, other than 4 or 5 years out of 20 finishing up, it's like a no-brainer. Like just step in the door, you know, like just open the door, dip a toe in.
And it's good to remember those things because you might start and then the market might be down 20%, say. But then it's just thinking, no, this is probably one out of very few years that this happens. It's kind of like, I remember swimming in Bondi. And I was like,
miss our Bondi days, by the way.
And I'm like, there's sharks in here, there's sharks in here. You start thinking about the actual stats around how many people have been killed by shark attacks, how many people swim in the ocean, and the likelihood that's going to happen to you. And so you start thinking when you invest, if you invested and then you have your first year is really bad, it's thinking, okay, we'll look at the stats over the long term. Markets have gone up every year except 4 or 5, depending on Australia or New Zealand, wherever you're investing. So it's just taking those stats and remembering them and not getting emotional about the fact that you may have lost some money.
I must say, I have thought about the shark attacks too, and I feel like if there's anyone to get attacked by a shark, it would probably be me.
As long as I can swim faster than you, then I'm fine.
I actually have just started surfing recently, and I'm purposefully going to get not a black wetsuit.
You're going to get one of those stripy ones and look like a zebra.
Yes, because I need to make it very clear to sharks that I am not their food.
Oh, gosh.
Okay, so investing for the long term generally means that you are going to be able to weather the volatility of the market in those years that are a little bit shit, the shark years, because in the long term, you're going to be up regardless.
Yes.
Vic, I was actually recently watching Wolf of Wall Street just to get some real motivation for my investing career. Firstly, shocked at the behaviour of all men during that time.
Oh, I know.
It was disgusting.
And to think that the market was actually like that.
Was it really? So do people talk about the glory days in investing and it was like that?
I personally wouldn't say they're glory days, but they're like
But
the
guys
outrageous days. Yeah.
Yeah, like
Yeah.
snorting cocaine off people's bums and stuff. I was like,
People's?
oh. Yeah, well, it's generally the woman, right?
Yeah.
Okay.
Yeah, no, I think that's because there was so few women in the industry then. I mean, there's a few more now, but there's still very little. That behavior was okay, and treating your clients like terribly was okay, and just getting as much money. And I think there's a lot more regulation now in place, thank goodness. But yeah, some of the scenes of that, and also what they did to clients, is just crazy.
So Matthew McConaughey, I'm a big fan.
Oh, same.
Something about the way he talks is so hot. But he did say something that I thought, oh my God, this is how I feel about the stock market. And I wanted to play it to you because I feel like it definitely encompasses how probably a lot of us feel about you and people in the industry that tell us all of this information. So I'm just going to play this bit. Just give me a second. I'll try to get my technicals.
Number one rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
No, Fugazi. It's fake.
Yeah, fugazi, it's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real.
Right.
All right? Right.
Now,
Oh gosh,
I have a bone to pick with you.
it's all fake.
Yeah. I'm kidding.
I guess the thing he's missing there, or the caveat that's missing, is he's more short-term focused. And I agree with him. Nobody knows what's going to... I mean, not that it's fake, but I agree with him in that nobody knows what it's going to do short-term. If it's going to go up, it's going to go down, it's going to go in circles.
Right.
And people that tell you that they do know what's going to happen don't. I don't know what's going to happen tomorrow, next week, next month. But I do know over the long term that markets tend to go up.
So actually, it's kind of sort of true what he was
Half
saying.
true, yes.
Interesting.
To a degree.
Yeah, okay.
I mean,
I
I
guess
hate
that's the
to
whole
admit it,
point of
but
this
yeah.
episode, though, right? Is
Yes.
that, yes, in the short term, we might not know what's happening. In fact, we definitely don't know what's happening.
Exactly.
There's going to be some shark years.
Yes.
You know, you might get a little
Bitten.
bite here and there, but it's going to heal and you're going to
keep
swim in
swimming.
the right direction.
Exactly. You're going to keep swimming up to the right.
Yeah, okay.
Just keep swimming, just keep swimming.
Okay, you always tell me to edit out your singing, so don't do it when we're recording. Okay, so invest for the long term.
Yes.
As long as you can, depending on your situation.
Invest for as long as you can is probably a better slogan.
Yeah, it actually really is, isn't it? For me, I could invest for 30 years.
Yes,
For my mum, she might not be able to.
exactly.
I hope so, but
Same.
you never know.
Sarah. Oh,
Love her.
invest for the long term.
It's hard when you're thinking about like people our age who might be wanting to save for a house or, you know, that money you can't really just put away forever or 30 years and think, I'm never going to need that, because that's kind of also unrealistic.
That's true. And I think maybe there's an approach to investing in, say, 3 buckets or 2 buckets. And it's saying, okay, this is going to be my shorter term investment. Maybe I'll take a little bit less risk because I want that investment in 5 years to buy a house, for example, to pay for a wedding, to buy a new car, whatever. But then for the other part or the other bucket, I'm going to do a much more longer term view and take a lot more risk. Because so it's kind of splitting it up or putting it in buckets for different goals is maybe a better way to look at it. Because yes, there are shorter term times when we need our money or shorter term investment goals, and that's fine. But yeah, maybe split it into buckets if you know what those shorter term and longer term goals are.
It would be really great to do an episode on that, actually.
Yeah.
Like how to figure out what your investing goal is, what you're wanting to achieve, and then therefore what kind of investments should you be looking for? How long should that be in there for? Because I wouldn't have a clue really how to bucket my investments.
Yes.
I'd love to do that. Maybe
Yeah.
we could look at doing that this season.
Yeah, that's a good idea.
Bucket investing. I feel like every industry talks about buckets, you know, marketing. They're like, all the
Investing
marketing
in
buckets.
Yeah.
Okay, I feel like this has been a very good episode. However, I'm aware of the fact that we have been potentially rambling. So should we just do a quick summary on the key takeaways for everyone for this episode?
Yes. Okay. So the first one I would say is invest for the long term, or invest for as long as you can. And your long term and my long term might be different. The second point would be that remember the stats. over the long term, markets tend to go up and to the right. And the third one is Matthew McConaughey was only half right.
Oh, I love that. I'm so glad a point that I brought to the table made it into the summary.
Thank you so much for listening to Raising the Curve. These conversations are designed to teach you everything you need to know to be better with your money, from saving to investing to talking with your friends about your salaries, all of that stuff.
And if you like what you heard, we would love if you could please hit subscribe wherever you're listening and leave a comment. Let us know what you thought about the episode.
And it only takes 1 second and it would really make our week, our month, our year.
Yeah.
So please do it. Okay. Love you. Bye.
Okay, quickly. The Curve was created to empower and educate you about investing, but we are not financial advisors.
Our platform exists for educational purposes only, and it doesn't provide personalized investing advice for your individual needs and should not be relied upon to make an investment or financial decision.
And always remember to do your own research before making any investment or financial decision.
We're here for any knowledge and support you need, but the final call is always yours.
And thanks for being here.
You got this.
Yeah, we know you got this.